one of the things that we're telling business owners today, and one of the reasons why we've grown so exponentially over the last couple of years, is this concept of having your own PPP plan. And that's literally what the 831B allows you to do. If you're going to have a profitable year, and I tell business owners all this all the time, if you're having a profitable year, taking a little bit off the top, parking it off to the side is not only great risk management, but it's just good business.
Most of the CEOs I talk to don't mind taking risks to grow their business, but they're always looking for ways to be smarter about those risks that are necessary for growth. And today we're talking about some of the ways CEOs can manage those inherent risks so that they can be more bold in their growth plan. And my guest today is Van Carlson, founder of SRA 831B Admin. And the tagline for his company is Emboldening Business Owners Through Innovative Risk. And I love that tagline. Welcome to the show, Van.
Thanks for having me on, Lee.
So like I ask all my guests, tell us about what you do, kind of how'd you come up? And so we have a little bit of background.
Yeah, no problem. I'm in the exciting world of risk management. But it is a aspect of business owners. In the beginning, any business, when you start, you don't really think about risk too much. But as you grow your business, risk becomes paramount.
Right.
I've been in risk management for going on almost 30 years now. So I've been in traditional insurances, working with business owners not only in my state of Idaho, where I live and work, but also around the country. And so, I love it. Honestly, I love what we do. It's I love working with entrepreneurs. I love working with businesses that take on risk, and how do we help mitigate some of those risks is what I really, that's what I function in. And it's very rewarding, honestly. You're not just selling a policy and representing an insurance company. You're bringing real solutions to real business owners that do take a lot of risk to do what they do every day. So it's a rewarding profession, and it's a growing profession, obviously, when, more and more companies are looking at having complete departments have risk management strategies, because that's what they need today in order to survive. And like you said in the beginning too, grow for that matter. So that's how I cut my teeth in doing what we're doing today is a little different. And obviously we're going to get into that, but it's really a risk management background. And like I said, it's a very rewarding career.
Yeah, thanks for that. And when we talked, I hadn't ever talked to someone in the risk management business who thinks about risk like you do, or at least comes at it from this perspective. Mostly what I hear is, let me quote you on a policy. And to me, that's not risk management. When I was earlier on in my career, even I would, talk to my friends or peers and what kind of business are you in? And it's at risk management. And I'd think, oh, that sounds like sexy. Like that sounds, great. Like I want to know more about that. And basically, then they would just say, well, yeah, I write insurance policies. And I'm like, so you insure risk. You're not really in risk management. Like,
right.
That didn't really coordinate in my mind, but you're doing something different. And I think that, of course, if a risk needs to be insured, of course, that there's insurance there. But what you're doing is you're coming alongside owners and saying, look, there's a more strategic approach here that can actually support you rather than just add more policies to your book. So if you would just sort of outline what you do, and then we'll get into our conversation, because I'd like to kind of talk about a couple different categories that you work with.
Yeah, no problem. So, again, man, when it comes to risk management, it's a complicated world. So, one of the things that we do, what we specialized in, and the reason why I even got started in this was really the Great Recession when the 2008 hit. Leading up to that, what you just described is what I was doing. I would go meet with business owners. I had one policy typically, and it's a package policy, and they were worried about price more than likely, most all the time. And unfortunately, when 2008 hit, the financial risk business owners took became pretty glaring. And that's when I thought there had to be a smarter, better way to run a business. And I had already known about a tax code called 831B that really recognized back in the 1980s, business owners that were self-insuring risk, and Congress getting together and creating an incentive to say, okay, if you're going to have this risk, and it comes down to risk financing and all these things that we talk with business owners about, when you talk about risk financing your business, you typically, if I'm going to own a commercial real estate portfolio, I'm going to have commercial insurance policies. They're going to cover me for fire, theft, vandalism, wind, hail, and all those things.
Yeah.
That's true through a lot of businesses, right? I mean, you're going to transfer. That's how a form of risk financing is paying a premium. You either pay it annually, monthly, or quarterly.
Mm-hmm.
And you transfer that risk, and that's a form of risk financing. And then there's risk that you just keep on the books that you cannot transfer through normal channels. And unfortunately, when you go back in 1986, it was really the farmers that were self-insuring crop insurance because the private sector was getting out of it. And of course, now it's really backstopped by the federal government. The crop insurance program is it's a heavily subsidized program. Very similar to FEMA or terrorism and these other types of things that's gone on in the last several decades now because it's just too catastrophic a loss for private sectors to want to do it. And these are for-profit companies, right? So Congress got together, created an incentive. Now you fast forward we're going almost 40 years on this code, and a lot of business owners are not even aware of it and haven't heard of it before. That's one of the reasons why, we love being on your platform, just to get the word out and education on this code. But the 831B allows you to use tax deferred dollars. So when we talk about risk financing and to try to keep it as simple as we can,
sure,
is, if you have this risk, how do you want to risk finance it? Do you want to use pre-tax dollars or after-tax dollars? And that's all this is. It allows you to use pre-tax dollars, meaning that we can still create an expense at your operating company level, expense those dollars out, and then dump it into now the box has to look and feel like an insurance company. We are an administrator of 831B plans, no different than the 401k administrator you hire to administer your 401k.
Gotcha.
Keeps you out of trouble, make sure your ERISA rules are being followed, and keeps those dollars tax deferred, either through a Roth chassis or through a traditional IRA chassis, right? So that's their job. Our job is the same on the 831B, and it really there's a 4-part test to it. There's some regulations to it, obviously, and
sure,
all that good stuff. And that's where we specialize in that. We are the largest manager of 831B plans in the country. And we're very proud of that. And we do it very well, obviously. I think our volume speaks to that self. But aside of all that, of course, I got bias on that. But
sure.
But if you're hearing about this for the first time, obviously it's another tool in the tool chest for business owners, and you owe it to yourself to always explore all types of tools when it comes to tax mitigation, and at the same time utilizing risk. So that's really what we're doing, utilizing tax deferred. And here's the thing about after-tax dollars. All that is your K1 retained earnings, your operating capital, all of those things. And of course, all of a sudden you start having expenses come in that you weren't budgeted for. You're drawing down the operating capital. COVID-19, the best example I can give on that, unfortunately, today is traditional insurance companies will never cover that business interruption trigger. And they can't afford to. It's too catastrophic. When everybody has the claim at the same time, insurance companies cannot afford to offer those types of coverage. Only the government can truly back that up, unfortunately.
Yeah.
And I say unfortunately because we still don't know all the pros and cons of what went on during COVID between the PPP and the ERC programs and all those lovely things.
Yeah.
One of the things that we're telling business owners today, and one of the reasons why we've grown so exponentially over the last couple of years, is this concept of having your own PPP plan. And that's literally what the 831B allows you to do. If you're going to have a profitable year, and I tell business owners all this all the time, if you're having a profitable year, taking a little bit off the top, parking it off to the side is not only great risk management, but it's just good business. And, unfortunately, most business owners today, they know the 179 accelerated depreciation. They know how to spend money in order to take deductions, which is somewhat of a form of insanity, right? That's one of the reasons why I got a lot of people in trouble in 2008, quite honestly, was my clients, which were home builders typically, or commercial builders, general contractors and subcontractors. Fourth quarter coming around, they met with their accountant for tax planning, and the accountant says, "Hey, I owe this much money in taxes." They'd call me up and say, "Hey, what's it going to cost for another skid steer and 2 more trucks?" Now, they may needed that equipment, may not have needed that equipment, or the equipment they had was perfectly fine. I don't know. But all they did was bet next year was going to be better than this year. And unfortunately, it got caught up in a lot of people, and they found themselves being, loans, governances and loans started to mean things, and banks started to foreclose, and and all those good things. And that's really when there had to be a smarter, better way. That's when I really became a believer in the program. And now you fast forward through all the trials and tribulations business owners have today when it comes to this risk itself. I mean, back in 1986, when the code was being formed, it was for really traditional insurances. Now you fast forward to things we're going to talk about today is like brand protection, dispute resolution, supply chain risk, the cyber exposure business owners have today. And unfortunately, more and more insurance companies they'll write a cyber policy, but it basically covers credit watch for the people that were compromised. It really doesn't do anything for the benefit of your company. It doesn't hire the forensic team to come in and find out what happened. I mean, there's just a lot of, unfortunately, cyber is becoming and we've known it for a while. And then you fast forward to COVID, where, can we really expect the government to step in? If you need if you need a PPP to keep your business afloat, what are you doing differently today than you were prior to that? Because any entrepreneur out there doesn't want to rely on the government to keep them afloat. But you had to do what you had to do. I mean, and it's funny. It's not funny. Every day now, I'm reading about businesses going out of business, and I'm thinking, well, it's been a decent economy. What's going? And I think it's some of this stuff is still lingering from COVID. Unfortunately, I mean, the government programs weren't. The consumers changed, or something's gone on within that business that has fundamentally changed after COVID-19, and the revenues weren't there. Now they're just shutting their doors, and I really see that across the country. I've been kind of shocked by, and some of them are big companies that we all know, and it's kind of been surprising to see because the economy's not been horribly bad, but so why are these companies now going out of business? I find that interesting, but anyway,
well, before we get into the individual categories, I wanted to just quickly, because we have a lot of different kind of companies listening. What kind of company is this 831B kind of strategy most appropriate for?
Honestly, we're across the board in gamuts of industries. So, I think of any successful enterprise ought to be looking at tools like this today. So there is no industry or any. Now there's some income levels where, obviously there's fees involved and everything else. We tell people if you're not doing more than $1 million in gross revenue, this probably isn't your timing's not now.
Sure.
Eventually, as you grow, everybody starts to look at these tools. But so from that standpoint, that we're like I said, I'm always, the fun thing about what I'm in now is I find out how people are making a living, and I think, oh my gosh, why didn't I think of that? I mean, I almost say that daily with people,
Right.
So there's
so many opportunities out there.
Oh my gosh. Yeah. And it's so awesome to see somebody, and I say it all the time, man. I mean, you took an idea, you ran with it, and you turned it to a profitable company. That's not easy to do by no means. And now how do you handle the risk on the backside? Right. And that's where we come in. So there's no industry out there that I would say that I think the biggest thing for me is when it comes to, the driver today is really what's going on in traditional insurance. Very similar to why the code came out back in 1986. We're dealing with business owners all over the country right now being canceled. I was talking about how the unique way people make money in our country, what kind of businesses they work. The more unique business you have, the more gaps and exclusions you probably have on your policy. And the reason for that is insurance companies will write a chassis policy, and it pretty much it's the one glove fits all kind of mentality. And of course they do that to scale. They got to get state approval on these coverages.
Sure.
So that, to go out and if that market isn't big enough, they're just going to find something that's already on the shelf and hand it to you. Right. And that's really where risk managers come in and say, okay, you have a unique risk. You have things that that's not normal, even though they might classify you as a manufacturer and you got covered under your traditional manufacturer's risk. But you got some really unique risk in here that we need to be able to find out and it comes back again, risk financing. Do you want to use pre-tax or after-tax? So that's another fun part of our business is just diving into these things and saying, but I think the biggest driver today is, and I think most CEOs would tell you this today, and the biggest 5 years ago, property and casualty insurance was an afterthought when it comes to cost. Do we have coverages? Should we turn this claim in? Those were not, but today it is a front and center topic with business with because that it goes right into your bottom line. You're if all of a sudden you take a substantial 20-30% increase on your policy you paid for last year and you're getting less coverage, where those dollars going to come from, and you got a budget you're running on, you may have a board you got to answer to. I mean, all the other things that CEOs have to deal with today, and profit is becoming constrained. It's because of this. I'm worried about. Honestly, I'm worried about what's going on in the insurance industry because I was just in Miami a couple weeks ago, and I was talking to business owners down there, and they're even having a hard time. They had a qualified buyer, and the buyer had to go finance it, but they couldn't get the appropriate insurance for the financier to accept the risk. And so this is like ACV on commercial building roofs, right? Actual cash value minus depreciation on roofs.
Yeah.
You're going to mortgage that building, and the best you can do is ACV on the roof, which means you're pretty much self-insuring that roof. If it blows off due to a hurricane, you're on the hook. So if the banks aren't thrilled about it, and it could cause a clog in our economy. I'm hoping Congress pays attention a little bit because interest rates are one thing, but the velocity of money is really huge in our country, and it requires turning and selling and buying.
Yes.
And if we're getting clogged because we can't buy the appropriate insurance, that's going to slow down, and that who knows where that can go. And it's concerning. And I bring it up in spaces like this because I think people that think a lot need to be thinking about that, because it's an unknown factor. Being 30 years in this business, I would never have predicted then the kinds of things I'm seeing in the traditional markets, the exclusions and the substantial rate increases that are occurring. Has been surprising to me.
Yeah, it's been pretty crazy. Well, let's get into the categories now. So the first ones that you mentioned was brand protection. Now, this is probably going to apply to a bigger company. It's got a brand, and they care about their brand. Tell us about how they can protect that.
Yeah. So, again, it's a huge unfunded liability in your books today. It's, again, back in 1986, I don't think anybody cared about the brand. I mean, they cared about their brand. But it was more of the national companies, right? Where, you had good consumer confidence in that brand. Right?
Sure.
And I would argue today, the smaller businesses today have more exposure than the big ones. Target got hit with a massive cyber attack, hit their PR a little bit. Hit their, the brand protection, their brand a little bit, but, no Targets closed because of it.
Right.
The smaller the business are, and realistically too, most businesses, this is the intangible asset that you have, right, is your brand, the consumer confidence, the contracts, intellectual property you might have, all those types of things will drive your brand. You're spending a substantial amount of money on content today in order to bring you, it's like trying to find the front page of the phone book now, right? You got to pay a little bit more to get in that front page on the internet. You're spending a lot of money. And unfortunately, it doesn't, it takes years to build up, and it takes literally seconds to destroy. And I've dealt with clients that have had these situations happen. I've had it with restaurateurs where, they had foodborne illnesses that made the local news. Where those dollars going to come from? Now, they might have foodborne illness coverage for loss of income, but where's the PR stuff? Now you got to hire a PR firm. You got to start putting op-eds out. You got to start increasing your content, your digital ads, because you got to build your rapport back up with the consumers.
That's right.
And it's across the board industries. I've had it with CPA firms where they've gotten cyber breached. I've had it where, unfortunately, somebody did something that they weren't supposed to do. It was an illegal act, but they were the leader of the company, and it tarnished their brand. It happens all the time, unfortunately. We all know national stories, but the local stories are just, it goes on every day, unfortunately.
Yeah, if you hit the leader, then that, tarnishes the whole brand of the company.
Yeah, and the brand is everything. Most business owners value their brand over their tangible assets, their buildings, their vehicles, because of why it took them so many. The consumers have a favorable.
Yeah, it's consumer confidence is what it is.
Yeah, absolute consumer confidence, exactly. So those are things that again, and I call it the double negative. So if that happens, you got less people coming through the door now, and your expenses are going up.
Right.
That's not the best time to go run to a bank and get a bigger operating loan, right?
Exactly.
So now where are you going to get those dollars from? And that's where an 831B really comes in. And that's risk strategies. SRA stands for Strategic Risk Alternatives. And that's really what we're doing at that point. We're taking a strategy and we're making it not so much of a unknown. The nice thing about when we start going down this road, we become real risk managers for our clients, because now we're talking about risks that we can start to build dollars aside.
Right.
But more importantly is like, how are you going to respond? How are you going to have I've helped clients that are like in hurricane areas. They got to have a response plan in place. They got to find out when their employees are going to go, when they're going to. all of this stuff. So we start talking about that with brand too, by the way.
Yeah. It's
And
much more
unfortunately,
customized.
yeah, very much more. And those are things that we can bring to the table for business owners to say, okay, what is a sample press release you want to have if you got a cyber breach, for example.
Sure.
All of these other things we can start to really bring in some strategies for business owners that they're just not shooting from the hip anymore, but they really have a plan in place, and they have the dollars set aside over previous years of profitable years.
Mm-hmm.
They'll be able to go to, we call it a rainy day fund or a war chest. And it could be either one of those, right? It could be, I got to go to war now because, I'm being attacked. I've had situations where I've had disgruntled employees go out and make up 20 different emails and start hitting people on Yelp. And all of a sudden he went from a 4.5 down to a 1, and he couldn't figure out, and people, in bigger cities, people live and breathe by that scoring, and he couldn't understand. And it was a person that was a disgruntled employee.
Yeah.
Again, I can go on and on about the nightmare. They're out there.
I like it because it's much more personalized of an approach to managing risk than just a blanket insurance policy, like you said before, because it's not all about just insuring or indemnifying the risk. It's really more about what are you going to do once this happens. Hopefully you'll get some coverage, but as we know, in a lot of these coverages, you're not even going to turn the claim in. So what are you going to do as a company? So having those plans in place and even testing or stress testing those is probably more important than just covering your risk with a policy.
Well, it puts it in your hands, right?
Right. I mean, more control.
When I look at professional liability insurance, unfortunately, it's a math problem for insurance companies.
Yeah.
Meaning, how much is it going to cost to fight? Whether the person was wrong or right, it comes down to a math problem for insurance companies.
Yeah.
How much is it going to cost to defend? What's our likely chance of winning it? Or can we just settle now?
Yeah.
Well, I've had situations where lawyers, doctors, architectural firms, consulting companies, they were in the right, but it came down to a math problem.
Mm-hmm.
And the problem is, if you're in a highly competitive world, your competitor is going to use that against you. That, hey, this guy got sued and they had to pay out, even though, in the eyes of the public, it looks like you were guilty, obviously.
Yeah.
But it became a math problem. And so, that's another thing I talk about business owners all the time. It's like, again, getting back to your reputation. Do you want to have that controlled by an insurance company, or do you want to have it controlled by you? And I'm not saying to walk away from your professional liability insurance, but I would tell a client, go as high as deductible as you can. We'll fund for the gap between that first dollar and before your insurance kicks in, but you're going to be on the hook for those first $25, $50, $150, $250,000 in losses, but it's going to be your control. The math, because the math is, anyway, that's a whole nother conversation we weren't going to get into necessarily, but I wanted to bring that up as an example of what's going on in the professional world too is substantially, and I say it all the time, you're paying more today and getting less coverage.
Yep.
That's what's happening.
Yeah, I think everybody's feeling that.
Oh, yeah.
You mentioned earlier about disruptions from storms. Like we just had Helene come through, and I don't remember, Ian, I guess it was. This is a good bridge to supply chain risk, because I know we've talked. Storm disruption disrupts operations. And so maybe speak to that a little bit. I think that's a very important piece.
Yeah, supply chain risk, we really saw a spin up on that after COVID, right? Mm-hmm. It was just less product out there, less way to pivot. And so, the problem about supply chain, and because we're such a global economy, again, going back to the 1980s, we were just probably in the infancy of becoming a global economy. And of course, the 90s and 2000, we spun up. But today the supply chain risk, small business to major businesses are, they're all dependent on this global economy now. And, if you have any kind of disruption along the way, if you got to pivot all of a sudden, and we've had that, we witnessed it in COVID-19 where, some of these guys are on contracts and they got to deliver. And there was no exceptions to that delivery. Like, oh, hey, the government, we shut down for a month and a half, 2 months, whatever it was. That wasn't in the get out of the jail. I shouldn't say get out of jail, but it wasn't out of the exclusions out of the contract that you didn't have to deliver still.
Yeah.
So some of these guys were paying it substantially higher for their products just to honor the contracts they had in place.
Yep.
So if you're locked into a pricing, and now all of a sudden whatever that product costs to buy today to fulfill that contract obligation, and you got to pivot or you got to go somewhere else to go get that. And now there's a delta between what you thought you were going to buy it for and what you're going to pay for now. Again, where's those dollars going to come from? Now you may have enough profit margin in there to make that gap, but that's not good. You're going to rely on that profit to run your company, right?
Sure.
So
sure.
that's really the glaring issue of supply chain today. And unfortunately, we hear it all the time. I mean, I remember a couple of years ago, Ford couldn't make F-150s because they didn't have a chip. Well, can you imagine if you're a small business and you can't make your primary product, the number one selling product of your business, for a month, 2 months, 2 weeks? I mean, what's that going to do? And so those are just really concerns that business owners, unfortunately, until you experience something like that, you're like, oh, geez, I didn't know I had that risk.
Yeah.
And then it'll slap you upside the face. And again, this is where risk managers come in and say, hey, here's some prevention issues. Here's some gaps I see. Here's some things I think you should fill in for. And again, all we are is a fill in for the ability to use tax deferred dollars after or pre-tax dollars. And that's really what we're doing. And
Sure.
I don't want it to sound complicated, and I sure the hell don't want to scare the heck out of any business owners out there because, it's what we all know. If you run a business, it's not easy, and again, one of the things that, and I say this because one of the greatest compliments as a risk manager we get, honestly, and I didn't expect this, but it's been said to me several times now over the years, man, I just sleep easier at night knowing I've done your program. And, from a professional standpoint, honestly, there can't be any better compliment than that. Because
for sure,
business owners, we don't sleep very good to begin with.
That's right. Yeah, that's a good point. I think as you're building a business, you don't sleep at night because you're wondering if you're gonna, make payroll because you need sales. And I think once you grow past that hump, these other bigger monsters sort of come out lurking, and you don't realize that they've been there the whole time. Now they just become more prominent. And so that's why this is a good conversation. And I want to have you on because I think it's good for people to hear about this before they have one of those monsters take a bite out of their leg. And now they're facing that, and that's all they can, to look at. It's good for them to think about this proactively.
Absolutely. And unfortunately, because it's risk management, because it's insurance, it's deemed as necessary evil. I get all that. I do. But man, I tell you what, we've taken enough risks to get to that point that we, anything along the way can mitigate. And I appreciate you bringing up the fact that, by doing some of these proactive things, it does embolden business owners to take on more risk.
That's
Why?
right.
Because they have a plan, they have a back room, they have a stop lock, they have a backstop somewhere. It does embolden them to want to take on more risk. And you know what? I'm all about that because unfortunately, I don't know if we're making more risk takers. I mean, one of the challenges we're going to have in the future is who's going to take on all the small markets, who's going to buy the small to middle market business owners that drive not only our economy but our employment base. We got this transitioning of wealth coming up. The merge between, we've got. I want to say we have 3 million businesses that are owned by people that are in their late 60s.
Yep, it's already happening.
Yeah, and over the next 10 years, there's going to have to be a transition on those, or they're just going to close up their doors, and we can't afford that. We cannot afford that.
Yep, it's true. I'm watching it happen, sort of through some back channel conversations with various people, and it's very intriguing to me watching it happen, and there's all kinds of paths that can be taken.
Exactly.
These businesses that are needing to be sold and need to be taken over by someone that is of like mind. If they can't find that person, then that business gets bought by a conglomerate and, becomes something completely different, which changes the economy for better or worse, depending on the situation. So that's just one example.
Oh no, I know, and we deal with it a lot. And so in our space, when we help business owners with that transition, we'll do transactional risk. A lot of these business owners will either carry the note, they got rep and warranties. Part of the promise, their reputation in the community. I mean, that's what they're selling. Their key client is buying 30-40% of the products from them. We'll wrap a policy around that, so the new buyer coming in can feel a little bit more at ease that there's money there in case something does. So we call them clawbacks and
clawbacks. Yeah.
Clawbacks.
Yeah.
And how do you finance those clawbacks? Right. Well, you can defer some of the selling proceeds into an 831B today, knowing those dollars are there, and the buyer is more we've actually seen it where the buyer, instead of getting a discount on the valuation of the business, you actually get a par, because that those dollars are set aside to recognize that, hey, you know what? I just bought your plumbing business or your HVAC business. You put out 3, 4, 5 year service contracts or warranties. I've got to honor those going forward. Well, one of the ways to handle that, instead of getting a devaluation, is put some dollars aside into an 831B. So when those things happen, you're going to pull on those dollars, and the new owner doesn't have to bear that cost and are the unknown costs going forward. So those are another advantages that the code can bring you that, again, I think are substantial given the right situation.
Yeah. So just as an aside, with the 831B, does all the money just go into one account? It's in one kitty. You can pull from that money for any risk that you're experiencing, or does it have to be earmarked?
No, it has to be earmarked. That's part of our job, right? That's where we come in and underwrite. So there's got to be specific policies that, you can't just, there's got to be a process and procedures to it. So one of the tests is, are you acting in the principles of insurance? So we have a claims process. We have policies that are written for specific risk. So that whole mechanism is in place. That's part of our admin. But I should tell you, the dollars are going to work too, by the way. So this is no different than the 401k at that point, where the financial advisor you have can manage the money. It can be self-directed. It can just sit in a bank and a money market account if you want. But but it would go in one account necessarily under that, because this 831B plan, it has its own tax return. It's a C corp. So you're going to have, you're going to be a shareholder of it. You can declare dividends down the road. If you sell your business and you no longer have the risk exposure to it, and you have a 3-year runoff, you can close it down, pay capital gains. And that's obviously the difference between ordinary income, because if you didn't do our program and you were just going to say, hey, you know what, I'm going to pay my tax bill. Every dollar that comes in, I'm going to set 50 cents of, I'm going to pay my tax on it, 50 cents set aside in my company. Well, you got to recognize this taxable income that year, right? So with us, you're deferring the taxes, but even when you bring it out on the back end, because it's a C corp, and right now the clients win because of what their tax rates are right now on dividends and long-term capital gains. Who knows who the future holds for that? We don't know, but right now it's obviously there's some tax arbitrage there, but
Gotcha.
But that's the long-term game. And again, it's no different than the HSA, right? If I keep putting money in my HSA and don't use it, it becomes another retirement vehicle for me down the road. Sure. And hopefully this does the same thing for business owners, quite honestly.
So to kind of wrap this up, there was one last category we want to look at, and that was dispute resolution. Tell us about that.
Yeah. So dispute is probably our most active coverage. It's for lawsuits. So, and disputes between partners and all that, general liability policies today that are bought by business owners typically have a right to defend clause. Been surprised in the last couple of years where insurance companies were able to get off some of those clauses, which typically has never been the case in the past. And then there's just some things that are just simply excluded from that. And a lot of it has to do with dispute between contractors, employees, business owners, and you personally just being sued. Your homeowners may not trigger for right to defend on those things. So you got these legal bills coming in, unexpected expenses, and all we're doing is taking some of these dollars and putting them aside into a dispute resolution policy. So if you do get served and there's no coverage anywhere, it falls down to those dollars. And that's, again, those are hugely unexpected expenses. It was interesting last year, for the first time in many, many years, liability claims exceeded property losses in commercial. And it just came out in Business Insurance Review that happened. Now, you could make the argument because of COVID, the courts were shut down. There was a backlog in lawsuits that were paid out by insurance companies. That was in 23. I'll be curious to see what 24 does. But typically, liability is fairly profitable for insurance companies. And that didn't happen in 23. And I don't know what 24 looks like. But so those are just things that business owners, hey, and by the way, the longer you're in business, it's a fact of life. You're going to get sued.
That's right.
We own, I saw a serious statistic. We have of all the barred attorneys in the world, we have 80% of them living in the United States. So
that doesn't shock me at all. It's a very litigious society we live in.
Anyway.
Well, this has been great. Thanks for this conversation and kind of laying this out. I think this is such a great, strategy. However people come about it. I think it's good for them to be thinking about their risk in a different way. So thanks for that.
Yeah, thank you. I really appreciate it. And if you want to learn more about us, we own 831b.com. We were fortunate enough to get our website domain.
Yeah, that's great. 831b.com. And if they want to be connected to you, send them to LinkedIn.
Yeah, absolutely. Or Van at 831b.com too. If you want to email me directly, we're in an education process. And if you're hearing about this for the first time, I always tell business owners, recognize the risk you took, recognize the employees that are, that are working for you, help you grow your company. Tools like this, you need at least be educated on. And, and that's all it is a tool. It's not a silver bullet. It's not, it's a part of a solution. But I think you owe it to yourself and the business that you run to look at types of tools like this.
Agreed. Thanks again, Van.
Thank you, Lee.